Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Thursday, it is June the 23rd, and what we are going to do in this episode is take a look at some of your favorite stocks and mine. And a couple of these we have covered in the past, but I do want to spend a few minutes here and compare some of the stocks that I currently hold. So regardless of the market turmoil and things like that, I have positions in Petrobras and energy transfer. Many of you have mentioned and commented on Vale before. Cliffs is one of Mr. Burke's favorites, and that's Robert Burke, who's one of our members of our investor community here. And Mplx is one of the favorites of Bulldogs number one. So let's take a look at some of these. So first things first, ADR means American Depository Receipt, which means that if you're a US tax person, then you're not actually buying the shares, you're buying ADRs, which are American Depository Receipts. This is true for Petrobras. You can buy PBR or you can buy PBR.A, which is the preferreds. You can buy those as well. And Vale is also an ADR. Energy Transfer and Mplx are limited partnerships. As a general rule, you don't want to keep a limited partnership equity investment in your retirement account, because usually they pay quite a high dividend, and that dividend is taxable. And one of the purposes of having a retirement equity account is to defer taxes for some time in the future. So as a general rule, this is not true everywhere. You don't want to really have limited partnership accounts or equity in your retirement portfolio. If we look at the actual industries that these companies are in, they are the same but somewhat different. So Mplx and Energy Transfer is most similar. The differences here is that Petrobras is an emerging markets integrated oil and gas company. It's a super major. Vale is a mining company specializing in iron. And Cleveland's Cliffs is a mining company as well, and they say they do miscellaneous mining. Let's take a quick sort of peek at these individually. So the 20-day stochastic. Now, usually what I look for on the stochastic, and I don't really use it very much as a technical indicator, but if the number is greater than 80, then you can say, generally speaking, it has been overbought. Now, that's not the case with any of these here. The weighted alpha, on the other hand, is all negative all throughout the entire row. So not too much to choose or to pick from there in terms of differences. What is interesting, though, is the analysts. And of course, analysts can change their minds on a proverbial dime and do a 180 and just change their minds. And then you need to go with whatever they say now. So if we look at last month's opinion on Energy Transfer, for example, it was a 96% buy. And by the way, so was Petrobras. Now it flipped from 88% on Petrobras buy to today's opinion, 40% sell. And Energy Transfer similarly was a 96% buy, and now it's an 8% buy. That's the only one of these five stocks that the analysts still rate as a buy. All the others are rated as a sell. You can tell me in the comments below whether you think you should be selling any of these or buying them. I'd be interested in your opinion. If we look at the price earnings ratio, which to me is a much better starting point than the technicals, once again, just as a general rule, they're all super cheap. The cheapest stock here at 2.3 is Cliffs, followed by Vale at about 3. Petrobras is about 3. Energy Transfer is just below 10. Mplx Logistics also just below 10. All of them are a buy. Once again, at the risk of generalizing, we want to be sort of at a PE of 15 or below, because the S&P 500 is trading at a multiple of about 15 times. If we look at the performance, and I'm going to ignore the very short-term performance here. We're not day trading. If you are day trading, you probably wouldn't be watching this channel. But we can see over the past 6 months or so, these stocks, with the exception perhaps of Cliffs, have kind of held firm, because even though the market has just tanked, many of these, for 4 of the 5, basically are sort of flat or thereabouts, Energy Transfer being the odd one out. It's still up 23% over the last 6 months period, but basically year to date, right? So it is the exception to the rule. Some of the energy stocks, Occidental Petroleum is a great example, are actually still sort of flying high, proverbially speaking, despite the fact that the market and energy stocks in particular is down 20% or thereabouts. Now, this is an interesting slide for me because what I'm doing here is I'm looking at the annual sales of the company. They're in the same order, by the way, every time. We look at annual sales of Petrobras, 84 billion, Energy Transfer, 67 billion, and so on and so on. And what I've done here is I've looked at the market cap, which is on the top line. So Petrobras, 74 billion, Energy Transfer, 30 billion, and so on and so on and so on. And I've done a basic sales to market cap, or you can call it price to book. So what you're doing here is you're looking at the sales and you're comparing it to the market cap of the company, and you find that Petrobras as a company is doing more sales, more in revenue than what it is currently valued at in the marketplace. The same is true for Energy Transfer. And look at the delta here. It's a company that's generating $67 billion per year with a market cap of only $30 billion. A little bit of a reversal here on Vale, generating 54 billion in sales, $72 billion market cap. Cliffs, much like Energy Transfer, $20 billion in revenue and only $8.5 billion market cap. Mplx Logistics, the other way around, but this is a limited partnership. It's a little bit different. It's more like a royalty trust. So you can't really apply the same metrics to all of them. 60-month delta, not a lot to choose in it here except for Cliffs, which is above 2. All the others sort of between 1 and 2 or thereabouts. The most recent earnings, all positive earnings, so all of them are doing quite nicely, thank you. And the most recent dividend, you can see, based on the share price, they all pay a reasonably healthy dividend based on the current stock price in the marketplace. If we look at the graph, and here I've selected a period which is year to date, Energy Transfer, as I mentioned, is sort of the outlier here. It's still up 22% year to date. And then you can see the drop off by the others, sort of 5 and 6% is Vale and Petrobras. And then Mplx Logistics, negative slightly year to date, and Cliffs down 23%. Don't write off a stock that is very negative in terms of its current performance, because very often it's those stocks that are trading at a poor multiple or very negatively that bounce back when you least expect it. I'm going to take a quick walk through the sort of snapshots here. I'm not going into any depth on any of them. What I want to do is just look at each of the 5, and this snapshot here is going to be the same for all of them. I'm just comparing sort of apples to apples, even though they are not necessarily the same company. So on Petrobras, we're sitting just left of center, right? Petrobras is super cheap. Earnings per share, $4.49 on a trailing 12-month basis. And the PE ratio on a trailing 12-month basis, only 2.6, 2.5. This is super cheap. I read a report from Zacks the other day that said right now Petrobras is the cheapest super major in the energy sector that you can buy. Massive annual dividend. Now, of course, the dividend is especially huge because the stock price has declined so much. $4.37 on an $11 stock is yielding almost 40%. So one of two things can happen here. Either they cut the dividend, or otherwise the stock price bounces back up. I saw on TipRanks just yesterday, I think it was, the target price on Petrobras is $17.25, which is obviously quite a ways away from the $11.41 that it was trading at earlier this morning when I took the snapshot. Not a lot of institutions hold Petrobras, but at the same time, not a lot of people would short this. I think you'd be nuts if you short Petrobras here. Energy Transfer, similarly, just sort of left of center. Earnings per share, obviously positive as well. The price earnings ratio, PE ratio, 10 on a trailing 12-month basis. Nice dividend of 80 cents on a $10 stock is yielding on an annualized basis approximately 8%. 34% held by institutions, not too heavy. And the short interest a little bit higher than Petrobras at almost 4%. Vale, once again, left of center on the 52-week range. Earnings per share positive. PE ratio of only 3. This one is super cheap as well. It pays a $2.67 dividend on a $14 stock, which is currently yielding 18%. Right? So much like my comment about Petrobras, one of two things can happen here. Vale can either cut the dividend, or otherwise the share price can suddenly spike back up to the sort of $20 range where it was a short while ago. Institutional holdings, 22%, similar to Petrobras. Short interest, less than 1% of the outstanding float. You'd be nuts to short this one here at that price as well. Cliffs. So Mr. Robert Burke, maybe you can tell us where you think this is going next, but Cliffs is literally sitting right at the bottom. of its 52-week range at $15 per share. Good EPS, super cheap PE ratio of only 2.4. It doesn't pay a dividend, so if you want a dividend, you're probably not going to be looking at Cleveland Cliffs as an investment. A little bit of a stronger or larger institutional holding here at almost 60%, but look at the shorts as well, 6% higher than the other three that I've just shown you so far. And this is the last one, so this is Mplx. Once again, just left of center on the 52-week range. I don't know necessarily what the compelling reasons are for Mplx to get back up to 35. I like at this moment in time, specifically in terms of the fundamentals, including what I showed you earlier on, based on the PE, the revenue compared to the market cap. I like Energy Transfer more than Mplx, but only by a short hair, you know, so it's like, this is not like one of them is my favorite and the other one is not. Earnings per share, 296, the PE below 10, very, very attractively priced here, delivering a dividend yield of $2.82, which on an annualized basis is almost 10%. So you have a couple of stocks here, by the way, institutions 22, and once again, the short interest, approximately 5%. So you have 5 stocks here, 2 of them that I currently hold long, so Petrobras and Energy Transfer. I haven't been adding to Energy Transfer as it's worked its way down with the rest of the market, but I have added to Petrobras, and arguably I could have probably waited a while. Maybe I was a little bit too impatient, but it's super cheap. So if you're going to hold it for 3 or 5 years or so, you can hold it, and you can quite comfortably do that. In terms of Vale, I'm not sure, but you guys can tell me what you think of that. Mr. Burke, tell us what you think about Cleveland Cliffs, where that's going next, and then Mplx. I'm not sure. It's similar to Energy Transfer, and I also hold a long position, which is quite a large position, on Pembina pipelines out of Canada, which you can buy on the Canadian exchange, PPL, or on the New York Stock Exchange, PBA. So guys, that's kind of a quick wrap here on 5 different stocks that interest me for different reasons. And obviously, as I said, 2 of them I hold long. So of the 5, I'm long in 40% of them. And the other 3, who knows? Shall I open a position in any of them? You let me know what you think in the comments. I look forward to your comments. Talk to you later. Bye.